Alright, hello and welcome to Camel Finance. I'm your boy Camel, and let's just get straight into this. Bitcoin up 17%-ish over the last 3 days. We have got the S&P and US equities in general bouncing strongly over the last couple of days as well. And it's important to point out the Fed is not going to be happy about this. So let's just pause for a second, because we kind of all saw this coming. We knew that next week was going to be pivotal. Next week is still pivotal. There's a good chance the cycle lows are in. There is also a chance that we need to come and undercut these lows. There's a big chance of volatility next week, whether that's to the upside or the downside. But let's first discuss this. The Fed is not going to be happy. And why is that? Because markets are calling the Fed's bluff. These bounces that we're seeing are essentially saying that the market is pricing in one of two things: either that the Fed hiking 75 basis points or less is okay and the economy and the market can withstand that, or it's possible that the market is pricing in the Fed having to pivot in the not too distant future. This remains to be seen. We are officially mid-September. If we're going to see hints of a pivot, you'd expect to see it soon. I think we can all agree, when we look upon the macro landscape, this is one heck of a wall of worry that the markets are climbing. But markets love to climb a wall of worry. Meanwhile, the Fed is slowly starting to signal that inflation is cooling. And here's why the Fed may need to slow its rate hiking. Are we about to see finally this dovish pivot, or the Fed start to ease off the gas a little bit into FOMC next week? Of course, the pivotal moment is CPI on Tuesday. But do you want to know the secret for PMI number and a Fed pivot? 52.8 is the key number, the key number. This number repeats itself in 66, 69, 74, and all episodes with inflation rising rapidly, similar to today. Here we are at that key level, 52.8. Is it possible that we're about to see this pivot? I've long been calling for this pivot. We'll find out whether I was right or wrong at FOMC the week after next. But I think we may well be entering a period of disbelief. If you look at this cycle, we've had the anger, the depression, and now nobody seems to believe that the bottom could be in. And this seems to me like we could be ripe for disbelief. We get some sort of rally that pulls back into that November cycle low and then goes, and the data is showing us this a lot. At the same time, we have even more institutions moving in here. Franklin Templeton has $1.4 trillion under management, and Franklin Templeton is adopting Bitcoin. Look at this. You know, these guys, you don't get to have that kind of money under management without knowing something, right? At the same time, the Brazilians traded over 300 million worth of Bitcoin in July. Likely accumulation, not distribution, let's be real. And the UK is telling us that they want to be the dominant global hub for Bitcoin and crypto. This thing is not going away. In fact, it seems to be building momentum. I know from experience, from being in the markets as long as I've been in them, that sentiment, especially when it's beaten down like it is at the moment, shifts on a dime. It really does turn around incredibly quickly. Where's the illustration I'm looking for? Here it is. It doesn't take much. You know, you get one of these pumps, a pullback that doesn't take out that low. If those lows are in, like I think they are, people are very quickly going to work out, oh, look, the lows are in. And then things get very bullish very, very quickly. MicroStrategy. Look at MicroStrategy go. They, according to their SEC filings, are considering selling $500 million in stock to purchase more Bitcoin. So this could be seen as degenerate, but ultimately they're in so deep now that this has been binary for a while, right? Michael Saylor is either going to be 100% correct on Bitcoin. He's either going to make an absolute fortune, or Bitcoin is going to fail and he's going to go down in history as the guy that bet it all on Bitcoin and blew up, right? But having seen just the tabs I've shown you at the beginning of this video so far, none of these signs are pointing to Bitcoin failing, right? And so of course the question is the bottom in? Or is this just a bounce before new lows? Or is this a short squeeze that we're seeing? So if you don't know what a short squeeze is, this looks like a lot of writing, but I promise it won't take very long. How does a short squeeze work? Well, first of all, how do you short something? Shorting means that you borrow stock or crypto from a lender, let's say 100 shares. So I borrow that from a long-term holder or a lender. I immediately sell it, 100 shares at say 10 for this example. Then the price drops, hopefully, and I buy back lower. So I buy back my 100 shares that I owe the lender at 8 this time, and I return them to the lender. So here you go, mate, here's your 100 shares back. Then I pocket the difference. In this case, it was 2 per share, okay? So that's my profit. That's how a profitable short works. What if, though, I borrow the stock from a lender, 100 shares, same example, I sell it immediately, so 100 shares at 10, and then the price goes up. So now 100 shares are at 12, 13, 14. Well, I better hurry up and cover, right? I better buy these shares back and repay them to the lender before it goes up anymore. It can go up. What if it goes up to 20, 30, 40, 50? There's, in theory, a limitless amount of loss for me. The stock or the asset can go up indefinitely. So in a losing example, this is going to cost me a difference of 2, 3, 4 per share, maybe more. And so this is what a short squeeze is. This is how it works. A short squeeze is forced buying. The market buyers step in and the price goes up. If I'm already holding a short, I'm starting to get wrecked. So I get forced to buy to cover my position. I need out of that position, and in order to close my short, I need to buy back those shares or assets or Bitcoin at a higher price. So the combination of market buyers stepping in to bid the market up, forcing the price up, and the shorts being forced to buy to cover their position equals even more buying, equals even more upside on the market price, which causes even more pain for the shorts that are still in. And so they have to cover and buy back. And you get this snowball effect of market buyers buying to squeeze the price up and then shorts being forced to buy to cover their positions. And this is what's known as a short squeeze. And this is what I think is behind this. If we look at the S&P short positions, they were all the way down at the C19 era plunge levels. If you look at Bitcoin, as soon as Bitcoin hit 20K, it left over 160 million shorts liquidated. So I think that's what we were seeing. I think that's why the price managed to explode 10, 11% in a day. Of course, there's the chance that we had already formed the cycle low, and we'll get to that in just a minute. But we've got more bullish content coming out of T-Analyst. We can see here that every time this indicator breaches the top and reverts, it coincides with major bottoms for Bitcoin, and it has indeed done that. So we should be looking for continued downside for this DI indicator, and that would mark the recent 17.5K lows as the lows for Bitcoin. At the same time, it's likely that Bitcoin is going to see something like this. History suggests this is a buying opportunity where we are now, not a selling opportunity. For all you Ethereans out there, 30,000 blocks left to be mined, actually less than 30,000 blocks to be mined, until the Ethereum merge goes to proof of stake. So we are likely somewhere between 3 and 5 days away from this merge now. It will be interesting to see what comes out of this. The White House has issued a statement to say that Bitcoin mining using vented methane can yield positive results for climate. So are they finally going to abandon this Bitcoin is bad for the environment narrative? Are we going to see this switch right before we enter the bull market? I think that's most likely. Just in case you have any doubts, remember that Bitcoin mining does not destroy the planet. As you can see here, they are, in this instance, using a Bitcoin mining rig to heat the greenhouse on the inside. Remember though, the path to carbon neutral, at a glance, it's easy to say that once Ethereum completes its merge in the week, it will have outpaced Bitcoin significantly to carbon neutral. However, with a longer term perspective, Ethereum cannot ever make it to carbon negative because it uses a proof of stake consensus mechanism versus Bitcoin, which uses proof of work. And proof of work can actually produce carbon negative results. It can capture carbon, and an example of this would be based on a projection of Bitcoin using 24% vented methane by 2030. Bitcoin is far superior, and it's only a matter of time before everyone works this out. Quick bit of reset for you before we get into the charts. The US household wealth fell by 6.1 trillion in Q2 of 2022, according to Reuters. And it's not just the US that are struggling here. In Germany, their energy prices are so high that they are turning the lights off in their bakeries. So it's really starting to get crazy all over the place, and times are getting harder and harder for everyone. Meanwhile, the UK is talking about printing £1 trillion worth of new banknotes to reflect the new King Charles. Now, I'm sure if you were to talk to anyone, they would tell you that that's because they're going to be taking in the old currency with Queen Elizabeth's head on and replacing it with the new King Charles. However, I can't help but think that this is ultimately going to be inflationary. That remains to be seen. But £1 trillion worth of notes when we're not too far away from a central bank digital currency, as per my prior couple of videos. Lastly, just leave the kids alone. What is going on here? Like, what is going on here? I'm going to play you a little bit of this clip, but...
Adelaide, what do you think of the chips? They're yum. Chips are great, aren't they? And these chips are even better because they think they're better for you. Did you know that? Yeah, that way, you know, Mum and Dad might let you have more chips.
They've
Good
got
stuff. Do you like
cricket
them, Annabelle?
written right there, man. Oh.
Do you like them? Yeah, they're great.
It's just the plague of locusts, isn't it? It's the plague of locusts in a different format. Just leave the kids alone, man. I don't. Oh, God, it really hurts my soul. One of the most interesting things about this period in financial markets is that almost no one is talking about gold. And this is incredibly strange. I've been wondering this myself for a while now. No one's talking about gold. Maybe it's because the price is being suppressed before a massive repricing and a backing of these new central bank digital currencies to gold. That is, of course, speculation at this moment in time. A little bit of data shows you that if you look at the Dow to gold ratio, then we are due a mean reversion down to sub 4 at least. And if we were to get all the way down to 1, as radical as that would sound, it would mean something like $10,000 gold and 5,000 on the Dow. So could we see this during the actual reset, during the collapse of everything? I don't think we're there yet. I've been saying this over and over again, but if we were to enter some great reset, great depression type scenario, I could more than see gold hitting 10,000 or even 20,000 an ounce. 5,000 on the Dow seems incredibly low. I think that would represent around an 80% decline from where we are, but never say never, right? Either gold's going to continue to do nothing forever, or something like this mean reversion will eventually play out. Perhaps it takes many more years. Take a look at some charts. The dollar looks like it's topped. This is, I think, just waiting to see the CPI print on Tuesday. The S&P 500 getting a strong bounce here. I don't think the Fed's going to be happy about this. Maybe we have an early cycle low in play. If we don't get a big drop on Monday, then I would say that the cycle low is already in and we have to entertain long on a breakout of this trend line. But I do want to see that CPI data first. I'm noticing as well, we are right into resistance, so this could well be another rejection off of here. Have to play a little bit patient. The NASDAQ, showing relative strength, has broken out. We'll be looking for a retest resumption. Perhaps we can get that on Tuesday, drop down into this on Monday, and then we get a nice print on Tuesday, and that can set us up for longs. Of course, if the CPI print's hot, we have to entertain shorts. VIX is finally compressing, so into support, see how that goes. Keep an eye on this, but no trades from the VIX from me at the moment. Real looks to be entertaining a Wyckoff spring. Very, very good risk reward. This was called ahead of time on the channel, so if you've been watching, you'll know that I was saying that if we recover this, we can long this and put a stop down here. So that is that. If you watch the channel for a while as well, you'll know that typically I don't take any weekend risk on ever. Certainly wouldn't have with the indexes or gold or anything like that, or oil, but from time to time I do take one of these share positions over a weekend because I can get a guaranteed stop and it's basically free for me to hold them. So anyway, that's that. Real long and strong. First target would be the top of this range. Nice tight stop, and we can target 710. I think this seems like in the middle of all this seems pretty reasonable to me. So that's that. See how that goes. I think if the markets can continue to follow through in the week, then this should fly, but that remains to be seen, and I will be looking to add some exposure to the indexes on Tuesday. Oil coming in for that retest, close right on the line, so we want to see this push off really, don't we? Again, all comes down to Tuesday's print. Same for gold. Gold looks to have found a cycle, but this is not the kind of like push off that I would like to see. So is there, we've got this level here to enter on potentially, and a break of this downward trend line as well could be another entry. So we'll see how that goes. I'd like to see a little bit more follow through before we can go entertaining more contracts for that. I have no silver position, but I think a recovery of this could be a long if that's the sort of thing you're interested in. And the miners look back above this. So I notice we're right into resistance here. So I think on Tuesday, we'll see how this behaves over the coming days. Breakout, retest, resumption, and I think that's where I'll be looking to add. So I've played this very, very patient. I haven't jumped in front of any trains here. Have plenty of exposure already. So hopefully we can get some follow through, and hopefully we can add some contracts to this as well. I'll make sure I update you on Tuesday. I do really want to make sure I see that print first though. Bitcoin as well. Look at Bitcoin. This looks very much to me like the sort of behavior you'd expect to see out of cycle low. So maybe we get a Bart Simpson pattern and we just drop back down into Tuesday, and then we can go. Maybe that comes in the form of a retest. I currently am not long Bitcoin. I didn't fit. It was up about 8.8% when I first saw this candle, so I wasn't going to be jumping in 8.8% above. I still think this is slightly early for the cycle. I think this would be 56. So it's within the window, but I'd like to see it 61, 62. That would be better. Of course, I can't force the market to do anything. So I have to just kind of wait and see if we can get this retest of this downward sloping trend. Ethereum right into resistance. So perhaps we can entertain a long from here, Monday, Tuesday. We'll see how that goes. For now, I'm just continuing to wait until Tuesday, but there will certainly be, I mean, we're only a few days away now, aren't we? Only a few days away from getting some serious risk on and going again. And we did really well capturing this move last time. So hopefully we can do that again live on the channel for you. And yields are still kind of getting hung up here, aren't they? Still kind of trading sideways. Again, I think they're waiting for Tuesday. So massive day on Tuesday. We will know if we are going to make new lows or if the lows are in, depending on that CPI print, in my opinion. And then we should have a good week of rally at least before FOMC. We get our next information to digest from the Fed. So overall, I think this is okay. I think we need some level of pullback before we can go, although perhaps this is just going to blast off. I know, and I've been saying this over and over and over again, I think the lows are in. I've been saying the lows are in since all the way back here. I think the path of most pain is higher, so that remains to be seen for now. I'm still open to being wrong. If we don't see a pivot this month, I mean, I've had it marked here, and again, I've been saying maybe it comes slightly later in October, but if we don't see a pivot around this time, then I have to abandon this thesis. If the Fed is still hell-bent on blowing up markets, it can do that, and then when we lose these lows, that opens up massive downside. I'm still open to that. I have no bias. I don't mind which way I trade. I don't mind if I'm long or short. Whatever happens, I'll be doing that here live on the channel. I do have an expectation, and my expectation is that these lows are in and we're about to get some kind of pullback and go, and then the target becomes new highs before what I believe is the final blow-off move into the new Great Depression and reset. So that's getting a bit ahead of ourselves. I've got a bunch of new subscribers as well, so if you're newish to the channel, then you might not have seen this. This is my rough sketch, my rough outline for where I think we go over the coming months before finding our low around the 11th of November, before then starting a bull market. So here's an update for you. So far, more or less on track. We took a down path instead of an up path, but I was never going to be able to get this price. This was just sort of an illustration. The main key take homes of this little illustration here is this is roughly what I expect the bottom to look like, which is net sideways before finding a low in around the second week of November, and then that will become the point of the start of the bull market. I've marked that 11th or 10th of November here. It should be the 11th. I'll just move that over one date. So I've marked that date here. This is the cycle low that's due now, and then we're due another one around the 11th of November, and I think that is the ultimate low of the bear market. Whether it takes out this low or not remains to be seen. So anyway, that's that. Hopefully you enjoyed today's episode. Hopefully there are some trade ideas there for next week. I know I'm going to be putting some risk on Tuesday, so make sure you're subscribed and turn the notifications on if you want to see that. Drop a like on the video if you appreciate the work today. I hope you enjoy the rest of your weekend. All the best from me. Take care. Cheers. Bye.